QuickBooks Online 2025 Sales by Product and Service Report. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample company file available to everybody looking for the result that has Intuit.com because Intuit is the owner of QuickBooks. We're going to be choosing the United States version of the software and then verify that we are not a robot with a little checkbox. That's all you got to do for the verification. Hit the checkbox if you don't want to be known as a robot. We're in the sample company file, Craig's Design Landscaping Services, opening the major financial statement reports as we do every time. The reports on the left-hand side. In the standard tabs, favorite reports, right-clicking on the balance sheet to open a link in a new tab, right-click in the profit and loss to open a link in a new tab, go into that middle tab, doing our standard process of the hamburger, needs to be closed, changing the range, 010124, tab 123125, tab, dropping down, going to years, and then running it to refreshing it, 24 and 25 now side by side. Tapping to the right, repeating the process. Closing the ham boogie. That range, once again, needs to be 010124, tab 123125, tab, dropping down for the years. And you got to run if you want to be refreshed. I'll run a bath and then sit in it if I'm going to be refreshed. Okay, any case. So now we're thinking about other reports, remembering that most other reports are going to give more information about one or multiple line items of these two major financial statement reports, balance sheet, income statement, which could also be called a profit and loss report. We're now looking at the income statement, looking at reports giving us more detail about the income or revenue line items. Last time, we talked about breaking out the income by customer. This time, we're going to do it by item. So quick recap here, remembering income is going to be recorded typically with the two major forms of a sales form and a sales form or an invoice form, although it could be created with a deposit form. If you create it with a deposit form, however, you're going to have less detail for sub-ledger type of reports. That might be worth doing in some instances because it's easier, such as if you're in a gig work and you get paid by like YouTube or something like that. So if we look at the drop down, the deposit form could be used, and you might use that with the help and integration of the bank feeds to record revenue. But if you want a full service system that's going to give you more detail on subledgers, we would use an invoice to record an increase to accounts receivable for those types of industries where we have to do the work first. And then if we're at a cash register situation, or we do the work at the same time, we would have the sales receipt. Now, either of these two forms will typically be populated with the help and use of the items. So the items are going to be the things that we sell, such as inventory items or service items. Note that when we set up those inventory items and service items, we might be tempted to align them or create another income account per item, which they kind of did almost too much in this sample company file, right? Because you've got multiple income accounts. You've got the design income and so on and so forth. Now that might be justifiable for certain types of businesses, such as here, where we have a job cost kind of system. But for most businesses, you're possibly going to have one to a few income line items because you just do what you do and you pay for everything else. Therefore, for the number of accounts, typically you're only going to have a few income line items and many expense items, because the category of things that we pay for on the expense side is great, whereas the category of things that we do to generate revenue is small because we're specializing in that thing to generate the revenue. That said, of course, we hope that from a revenue standpoint, the revenue side is going to be greater in terms of dollar amount than the combined dollar amount of all the expenses that we're generating or expending in order to generate that revenue. So that's the first thing we want to keep in mind. When you build the items, when you create the items that you will then be using to populate the invoice and the sales receipt, then you don't want to usually set up a different income account for every item, in part because if you properly use those items, you'll be able to create subledger reports to give you that more detail while not over clouding up with too many accounts the profit and loss report. So we're going to look at the subledger report breaking out income by item. That is similar, if I go to the balance sheet over here, to what we did breaking out the subledger reports for the accounts receivable and the accounts payable, remembering that if I drill down on any account like the accounts receivable, we get to the detail of it, which we could call a general ledger type of account. They're going to call it a transaction report. Similar thing, meaning we're breaking out all the transactions that created it by date. However, some accounts we want more information. We want to break out, in essence, this same information, but in a different order. With regards to accounts receivable, we have a subledger report breaking it out by who owes us the money, which is going to be customers. So the subledger report that breaks that out will almost always, when using QuickBooks, tie into accounts receivable because QuickBooks forces us to add a customer every time we post something to the accounts receivable account. Now, the income account is similar but different because we have multiple income accounts. So it's not like we have just one income account. You might have one income or revenue account, but you might have more than one, possibly not this many. But still, any of those income accounts will have their own, what we would call general ledger account from a textbook standpoint. So if I go into any of these, we've got the general ledger account, which is going to be broken out by date. They call it a transaction report, and it gives us the types of forms that were used to build this account typically. And what QuickBooks wants us to use is an invoice form for accrual components when we do the work first, and a sales receipt if we do the work at the same time, such as at a cash register. But you can imagine using deposit forms for this as well in a more simplified type of system. So, but we would also like this information possibly broken out in other ways, such as income by customer. So if I had income by customer, we looked at last time, we really want all income, total income, broken out by customer. Or this time, we might want income broken out by the stuff that we're selling, goods and services, the inventory items or service items that we perform and do. So that's what we'll work on this time. Remembering though, the income account might not tie out exactly, or the total income, total revenue might not tie out exactly to the subledger account of revenue by customer or revenue by inventory item, because the QuickBooks doesn't force us to add an item every time we post something to income. It's possible, for example, to enter a journal entry posting something to an income account without adding an item, a service item or revenue item, the thing that we sold, which will throw off the subledger account. Now, that might not be a huge problem because remember, the income statement rolls over or closes out, resets every year, you can think of it. And that means that if it gets messed up, if it gets thrown off, if it doesn't match the subledger, you can kind of start over next year and it should match, because then you're going to start over from zero and so on and so forth. Whereas in the balance sheet, because they are permanent accounts, that does not happen. So if the accounts receivable gets thrown off from the subledger, it's more of a problem, because the only way to fix that is to go in there and fix it. You have to fix it or it's never going to be fixed, whereas the income statement's reset. Okay, so let's go back to the first tab over here and close up the ham boogie. Let's scroll down to the reports we're focused on this time, which are the sales and customer reports. Remembering, if it says sales, that's another term for QuickBooks for revenue, basically, and customers are who we sell to. So we would think that pretty much all these reports have to deal with the income statement, revenue side of the income statement. So we've got sales by customer, and so we have estimated and progress invoicing. So it deals with estimate, progress invoicing, specialty area, customer contact list, just a list of the customers. Income by customer summary, we looked at last time. Sales by customer summary, we looked at last time. Sales by customer detail, we looked at last time. The deposit detail noting that this you would think is kind of like a balance sheet account, but you would think that most of the increases in the cash account would be deposits from ultimately customers. So that's why you would think it makes sense kind of to be here. Estimate by customer, so estimates don't actually record anything but would need to be tracked for certain types of industries. They put the inventory items here as well, even though, again, you'd kind of think that would be a balance sheet type of account, but they have nowhere else to really put it. And we do sell inventory, so it kind of deals with customers to some degree, so they kind of shoehorned that into this group. We've got inventory valuation, product list. These are the things that we sell. And we'll talk more about setting up those things when we get to the second half of the course because that will be a new company file where we will set up those items. Sales by product and service summary. So this is the one we're on now. Right-clicking, open link. And then we got the sales by product or service detail. Let's open that one. We've got the payment methods. We're not going to deal with that. Physical inventory again, and the timing reports. All right, let's take a look at these. We're going to go to the tab over here. We're going to close this back up, remembering this is an income statement reports. Income statement reports are timing reports. You can compare to the analogy of how far did you drive in a day. You need a beginning date and an ending date, in other words. 01/01/24, let's go to 2024 to 12/31/24. Run it to refresh it. So there we have it, sales by product service summary. So what do we have here? We've got the things that we are selling, and this is going to line up to the items that we're selling. So just a quick recap on how that gets put together. If I go back to the first tab, open up the ham boogie, and we go down to the sales area, and we go to the products and services. I'm going to close up the ham boogie. Then this is where we have the list of items that we are selling. So we create this list of items, making our sales forms easier to populate, meaning when I go into, for example, an invoice or a sales receipt and we sell stuff, we pull in the item here of the thing that we are selling, which is going to populate the dollar amount usually. Now this one's a little bit funny because, again, it's a job cost system, which is a little bit strange, but usually that'll give us what we sell it for, and if inventory is involved, and if we're tracking the inventory on a perpetual inventory type system, it will also track the units of inventory as well as the cost of goods sold, the expense of us consuming the inventory at that point in time. All right, given that, let's cancel leave without saving. Let's go on over here. So that means this is going to be the things that we are selling, the goods and or services. So it gives us the quantity, the amount, and then the percentage of the sales. So if I scroll all the way down, here's our sales amount, total sales amount at $5,852.75. You would think that would tie out to the income statement, 5852 income statement for total income, which is, let's close this up, 5828. So it's not exactly tied out. Why? Because it's possible to throw it off by posting something to income that doesn't have an item tied out to it, possibly with a journal entry. But next year in 2025, it'll start over. So hopefully we have a chance to tie out then at that time. So we can then compare, these are just percentages of the total. So we have like a vertical analysis built into this report. So then we have the vertical analysis, which is going to be, let's take this one, for example, 1175 divided by the total down here, divided by the 5852.75, gives us about 20.8% when we move the decimal 2 places over. So this is also one that lends itself to like making a pie chart, because you might say, I'd like to break out my sales by items that we sold and see from a visual standpoint which ones we sold most, which they give you a nice breakout with the percentages. How can we build a pie chart? We might do it later. We can export them to Excel and then use Excel to give us basically a pie chart. So it also will give us the average price here, and then it's going to give us some cost of goods sold type of stuff as well if we're dealing with inventory that has a cost of goods sold to it. Let's go to the tab to the right and run this one. I'm going to close up the hamburger. This is sales by product service detail. going from 010124 to 123124, and say run it. Boom. So now we've got this similar information, breaking out this information by the items that we're selling, and then it's going to give us the detail. So it's giving the detail within the range that we sold, and that means that all of the transaction items will typically be sales receipts or invoices, because those are the things that impact income, unless you have deposit forms, which might not show on this report because they are not really designed to report here to be an income reporting item, but you might do that in certain instances for the sake of ease. And then at the bottom of this report, we get a total at the bottom of this thing. We still get a total at the bottom of this one, which makes sense because you could still do that for an income report because it's going to start at point 0. So you get a much more detailed report with the actual activity broken out by the items that we sold. So the 5852 here should be the same as the 5852 here, which should be the same as this 5828. It's not quite exactly the same for the reasons that we discussed before. So that's the general layout. We might use these reports later to then again build charts, which you can export to Excel, which is great. And make some charts fairly easy. It's like that song. It's so easy to fall in love. And then whenever you hear that, you're like, dude, it's kind of annoying because I know it's easy. That's why they call it falling, right? That's why they call it falling. It's easy to fall. It's easy to fall. It's hard not to fall. That's the thing. It's like writing a song saying, it's so easy to slip on a banana peel. It's so easy to slip on a banana peel. It's like, I know, that's why they call it falling. Honestly, that's not helpful. I could get behind a song that sung something like, beware of discarded banana peels if you don't want to fall on your face, or something, gives you like a warning or something useful. It's not like anyway. That's the idea.